Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Star Wars edition of Benzinga's PreMarket Prep. May 4th, may the 4th be with you. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, the earnings parade will continue. We'll get to that. Facebook, Tesla, Kraft Heinz, Fitbit, you know the drill. Also, two really good guests on today, though. Cate Long is first at 8:35. She is a muni bonds expert, the founder of Puerto Rico Clearinghouse. If you've been following the story, of course, Puerto Rico declared bankruptcy yesterday. Finally, she's going to talk us through that, next steps, and what it means going forward for people exposed to Puerto Rico. It's I think the largest, exposure is U.S. pension funds. So we're going to talk about that and how that relates to us here in the U.S. Also, 8:50, we're going to have Gordon Johnson on, managing director at Axiom Capital. He upgraded First Solar yesterday to a hold. He's going to talk us through why he is maybe changing his tune or maybe not.
Gold getting a little bit of silver in the red as well by 5 cents, trading at $16.49 now. Well, we're getting a handle on the show here. I think things are moving along. We're going to bring Dennis in. Dennis, you had some fun at After Hours yesterday.
Oh, always have fun in after hours there, Joel. Yeah, lots of fun, and not a fun night for me, though, just before we get into the stock talk, because I stayed up late watching my Oilers game and watching them blow a 2-0 lead, watching them fall apart in the second period, tying it with a minute to go in the game to send it in overtime and then losing overtime. Me going sadly to bed at 1:30 Eastern in the morning. So tired here this morning, disappointed, but we're still 2-2 in the series, so there's still hope for my Oilers.
Do they still have home ice advantage?
No, they gave that up. They're up 2-0 in the series, just if you're not following along. And they lost both of them at home, so now they've lost home ice advantage. So it's a game of, so it's 3 games. They have, obviously, to win at least one more in Anaheim now, which is possible. They won 2 in Anaheim already, but they were looking good just a few days ago. Now it's looking a little bit more scary.
All right, but let's start with not an earnings stock, but a stock we like to talk about. A stock you got a decent trade-off in here. Another drop in crude oil here. Another 40 cent vacuum here. Now we're well under 47. I don't know what just broke there in crude. We'll have Spencer.
Oil's getting the beats here.
Wow, look at that. Man, oh man, oh man. So let's talk about Fizz, Dennis, the stock that would not
I don't want
to
talk too much about,
Okay.
I won't give too much opinion on it because I don't like to talk my book. I'll just say stock. Spencer, first give us the news on it, and then I'll just tell you, and then I'll give the analysis.
Spencer is eating treats that Lizzie brought in. So
What do you mean Spencer is eating? What's going on, Spencer?
I'm sorry.
You're eating. You're on a live radio show. You can't eat.
I'm done. I'm sorry. It was supposed to be quick. All right, Maxim initiated coverage of Fizz at a sell, okay? Well, look at that price target there. Look at that price target on Fizz. Very, very low. $33. Did I get that right? $33?
Yeah. $33. Stock closed at 91. They initiate with a sell. $33. I saw that come across, and I actually did get short a little bit of stock last night in the 89 handle, and I'm still in it, so I'm not going to talk it anymore because I don't like to talk my book.
All right, don't talk your book like they do on CNBC. You are trading down quite a bit here. We were talking about this on the pre-market show, and there was a couple lows at 86. So if you could take that out, a lot of downside here. Dennis, I think this is one where, it just may never get back to your price. So I encourage you to hold on, but if you must cover...
the scalper blood in me, though, Joel.
Pre-market low here in Fizz is... Wow, it got all the way down to 85.37. Yeah, that's a pre-market low. So, Bob, we'll see. Any kind of retracement of this thing, and I don't know where you want to start to move at from this low here.
But it got downgraded before, and after a few days, it did come back. Who was the analyst that downgraded it back in just going back to April 20th when it had the big gap down.
That was Credit Suisse downgrading
Okay.
from outperform to neutral.
And that knocked the stock down, obviously, but it did come back, in the next 7 trading sessions. So, okay, well, we'll leave that analysis because obviously I'm in the position, so I
Okay.
don't like to talk about that. Let's move on to the big earnings stock from last night. Its stock was all over the place. It went up, it went down, it went up, and then it went down hard. Facebook, and now it has come back hard from the pre-market lows, trading down only $1. Straddle Raiders probably partying in the streets because obviously I'm assuming the straddle was a hell of a lot more than $1. Joel or Spencer first, give us the numbers.
Q1 EPS $1.04 versus $1.12. Sales 8.032 billion versus 7.83 billion estimates. So they beat on the sales number. They did miss on the EPS though. Q1 average daily active users 1.28 billion, up 18% year over year. Monthly active users up 17% year over year. And then after that, we found out that WhatsApp, which is owned by Facebook, was down across the globe.
And it really tanked actually when WhatsApp was down. I was looking at that in the stock. If you look at that, well, if we look at what it was doing last night, it started going down right at that time. And what was the low after hours there, Joel?
Wow, they got well into the 145 handle. Your pre-market low comes in at 145.45. Now you.
What do you think now? So we look at Facebook. It kind of put in this rough double top, say 153.44, 153, just from the last 2 days, 153.60. Now the stock's down, a few bucks from that point, only down $1 overall. What are your thoughts here? I mean, Apple came back yesterday from being down on the day. Actually, Apple closed in the green. Unbelievable from where it was. What are your thoughts here, Facebook? Is this just obviously we've already had the dip and it looks like the buy the dippers came in. Do you think the party continues here, or do we retest those lows?
I'll give you. I know when you like one number and one number only, but I'll give you the close of 151.80. That was not the old time closing high. That was the close from yesterday. Now this vicious rebound off the low has stopped just short of that of the closing price. So I mean that's what I'd keep an eye on. It gets above 51.80. Yeah, you might sneak up into the 152 handle. The old time closing high is 152.78. So there's two levels. Yesterday's close. Right now, till you can get above that, I think you see continued downside in Facebook.
Then you got Tesla, and Tesla's come off the lows as well. Again, it shopped around after the report. It bounced up, then it was down, and obviously it's settled down, and now we're down $5 here. Spencer, details from Tesla numbers.
Q1 adjusted EPS of $1.33 loss versus an 81-cent loss estimate. Sales of 2.7 versus 2.6 billion dollars. They said the Model 3 is on track for production in July. Q1 vehicle production about 25,000 cars, up 64% year over year, and they have about $4 billion in cash on hand heading into the quarter. Q2.
What is the after hours low, Joel?
After hours low here in Tesla Motors, you have a pre-market low of 301.10.
$300. It's
Yep.
got to hold 300. That's the level. We talked about this a couple weeks ago when the stock, was trading around 304, and I said it's got to hold 300. It tested it twice after that, almost on the kisser. 323, 342, the lows from April 20th and April 21st. I'm going to say it again. It's got to hold on to 300. As long as it's got 300, the bulls are still in charge here. Loses 300, then you get concerned that, some of the wind might come out of its sails.
All right, just consolidating here over the last hour or so here, right around the 306, 307 area. Boom. What do you have? You got a gap. So 310.45 was yesterday's high. Yesterday's low. So keep an eye on that if you go into rally mode to fill the gap. And yesterday's close just above that at 311. Coming back on the downside, a lot of air in this, Dennis. You did have a couple lows right at 300 you want to keep an eye on. 323 and 342.
Jumping over here, just keeping on the earnings parade, and there was a few other ones that are interesting. Fitbit, let's talk this one here. It's getting a lift here. Dogs still barking, Joel. This theme continues to work, where, the leaders like the Teslas and the Facebooks and the Apples get hit a little bit on their earnings. The dogs, and we'll call Fitbit maybe the biggest dog of them all, getting bought on earnings. And Spencer, just give us those numbers, and then we can jump into some analysis.
Yep, Fitbit. I own a Fitbit, as I'm sure I've mentioned before on the
I have
show.
it too, but I gave it to my sister-in-law.
Q1
'Cause I
adjusted
used it
EPS.
for a month. I learned all the data about myself, and I was like, I don't need this anymore.
All
That's
right,
it.
all right, fair enough, fair enough. Q1 adjusted EPS, 15-cent loss versus a 19-cent loss estimate. Sales of 299 million versus 280.8 million. So they beat that number. They see their Q2 adjusted EPS at that's a miss. 11-cent loss was the estimate that came in, 3 cents below that on the high end of the range. Their sales estimate also missed. The estimate was $350 million. They're coming in. They see Q2 sales at 330 to 350. So they just got at the high end of that estimate. And then for the fiscal year, that's also lower for the EPS and for the sales.
So if you're coming in this morning, you're saying, well, wow, the guidance isn't that great here. Why is the stock trading up? Well, you haven't been listening to the show because we've been talking about all these dogs rallying even on not great earnings. And that's exactly what we're seeing here this morning. It's just a matter of the market that we're in. And sometimes that matters more than the individual earnings reports themselves. I think unless Fitbit completely, completely blow the quarter, the stock was going to rally. And, that's what you're seeing here this morning. It's up $6.15. That being said, this is still a dog. There's still a lot of overhead supply. That pesky high we had back on February 27th at 648 kind of stands out to me. So I do think you're going to still find sellers here, but not surprising that it's rallying on the initial report.
Nice call on that 648 high, Dennis, because your pre-market high is right there at 650. You've broken out. I think you just need to hold $6. I see your 5-6 day high right there. So if it holds 6, it has a chance to test that 650. But I think under 6, you lose that a little bit. You could easily fill the gap down to yesterday's high at 586 and then yesterday's close at 568. So not a great report, but they're buying the dogs here. Another example of that today.
Jumping over here to AIG. And you know what? I didn't even have AIG on my list to report. I must have missed it because AIG did report. It took off last night up to 63.5. And I was like, whoa, what's going on AIG? And then I'm like, oh, the numbers. I'm like, oh, I didn't even know AIG was reporting. But, when you have 297 stocks reporting, I guess you can miss one, when you're doing your own analysis there. And AIG actually blew it out here. But we've seen this before where AIG comes out with blowout numbers. And for whatever reason, it just kind of usually gives it back. And, that's what we're kind of seeing here. Spencer, give us those details from the AIG numbers.
AIG Q1 EPS $1.36 versus $1.08. That's all I got.
That was quick. Anyways, we did get up right on those initial numbers. I believe I saw 63.5, Joel.
You
Did I
did.
see correctly?
You
Going
did.
off my goldfish memory here, too.
63.50 right on the nose. Some nice
Yep.
volume traded there as well. That matches your high at 63.47 on the March 16th, but that's not going to help you now as we are now back into the 62 handle and well into it as well. So you got to reload here. You got to look, where's the paper going to be? And the paper's probably going to be up there just under $63. See a high at 62.84 and 89. So resistance 63 for now, Dennis.
Financials are strong here, though. Something else to consider. Just this morning here, I'm looking, just across the board. I'm seeing Citigroup trading up about 0.5%. Bank of America is trading up about 0.5%. J.P. Morgan, Morgan Stanley, Goldman Sachs, all about the same. They're all up. I guess the algorithms got this pretty perfect here this morning. They're all up almost exactly 0.5%. Now, AIG, obviously not a bank, but it's a financial. It has its own earnings report. But just saying overall, financials look to be, if I'm just looking at the sectors this morning on my sector screen, the financials look fairly strong. Although the overall market looks fairly strong too, as the SPY is trading up 60 cents here this morning.
Yeah, SPOO's up 6 points right in concert with that. But yeah, AIG, decent report.
And where do you want to go now? 297 stocks, Joel. Did you have a couple on your list that you wanted to go to? Because I can go anywhere. We can go. We can go into the rental car markets and talk Avis Budget. We could jump over to 3D Systems. We could jump over to Kraft Heinz. There's so many stocks.
Let's do KHC. Let's do KHC.
And again, okay, so the themes in this earnings season, if you're noticing, there's a lot of themes here. And we talked about this with MO when Mo got killed. I'm like, wow, people come in here because they like the dividend. These are defensive stocks. They typically, bounce back. And MO on their earnings report went down to the 65 handle. It closed that day in the 70 handle. So it basically fell $5 and then got it all back. KHC did the same thing last night. It actually fell significantly down to the 85 handle. I was looking at my screen. I was like, who's really hitting KHC? All the way, I know it's disappointing numbers, but this is Kraft Heinz, defensive stock. They bought it all the way back up to actually, it was trading positive after that. And then it started to leak here a little bit. Now we've had an odd lot, 33 shares traded at 87, but it's been 87.20, but not nearly as bad as it was last night.
Missed the low of the day there when you dip down under 85 and a half. Someone's not paying attention. Getting a rebound, this thing has been all over the place. So let's look at the range from yesterday. Yesterday's low is 88.90, so 89 is going to be resistance. That's still $2 away from here. Taking out the former low of the move, I think you could do some more work on the downside here. I don't know if you quite get to the pre-market low, but looks a little
I'll
weak.
tell you, if you want to talk, I don't know if you were just listening to anything I said, because I'll offer you a bet here right now.
Yeah, what do you want?
And the after hours low is safe in this.
Oh,
I'm
I
saying
know
it's
that. I
not even
said
coming
ahead of it.
close.
Yeah, I know. I said ahead of it. I just think
I'm not even thinking. Okay, so I'll even propose you a bet. 86.35, which was the low back on February
No.
16th. That was that blowout low, and then I don't know if there was rumors or whatever the hell happened after that when Kraft Heinz popped up to 97, which was absolutely ridiculous as well for this food stock. I'm saying it doesn't even challenge 86.35. So if it goes 86.34 anytime today, you win the bet.
Do you want those numbers, by the way, on KHC?
Oh yeah, supposed to give us the numbers.
Adjusted,
Contemplates my bet.
adjusted EPS 84 cents versus 73 cents in the prior quarter last year, or year over year, I should say. Sales 6.36 billion versus 6.57 again year over year. So a bit of a decline there, and that was for the Q1.
Joel, what do you think?
And
86.34. Trades there, not in the pre-market because there's
it's
like no volume in
$2
the
away
pre-market,
from
but regular
no,
session.
no.
86.34. Trades there, you win.
It's $2 away from there. No way.
No, it's not. It's 87.20 to 88.58. So the bid's only a buck above that. Not even 80 cents above.
You said
that.
86.
Yeah.
Okay.
Well, it's 87.20 bid right now to 88.58. So if we go in the middle of that, it's it's a buck and a half below that.
All right, but where do I see the last print at 88.49? Nah,
That's an odd lot. It's 50 shares just bouncing around. Those odd lots don't know what the hell they're doing.
Nope. I'm going to do what
The
you
bet's
do.
out. You're not going to bet.
No, because
bet.
I'm going to do what you do. Just keep turning them down until I catch
and then
it.
you see the bet that's out to lunch and you hit the bid.
Yeah, exactly.
How I made my trading career. All right, so 820 here. Let's talk Square, SQ, this stock here. Loved by the street, really, really loved last night. Loved by Fast Money. They were all pumping his tires on Fast Money a few nights ago. I believe it was Steve Grasso, who obviously had this one right because the stock tore off. This stock really tore off last night. This got over $20. How high did this get last night, Joel?
Oh, got well into the 20 handle on the initial spike. Got well into it. Your pre-market high, 20.35.
And Spencer, give us the numbers here that Square took off 10% last night. It's giving back half of that.
Q1 adjusted EPS 5 cents versus an 8-cent loss. Estimated sales 461.5 million versus 450 and $2/3 million. So a good number for Q1. As far as Q2 guidance goes, EPS coming in well higher than the estimate. Estimate was $7.07 loss. Guidance that they see is actually 3 to 5 cent gain. Sales coming in higher as well, and then for the fiscal year, EPS coming in well higher, and sales coming in sales coming in lower than the estimate for the fiscal year sales. But everything else is guided well.
So I know we're having trouble with the chart, so I'll just try to I can paint you the visual. This thing tore off right on that initial number all the way up to 2035, and then started leaking, and it leaked back down into actually the 18 handle there before settling here, and I will say for the last few hours is just kind of hanging out at 1910, 1905, and that coincidentally, or maybe not so coincidentally, is the high here of the move, and actually on Square the all-time high. So it's right here at all-time highs in SQ. bid heavily at 19. I see 30,000 shares on NSDQ bidding at 19. So this looks like it wants to open at a new all-time high. Joel must be on the mute trick.
No, I don't. I know. I'm here. I'm here. 19. You took the words right out of my mouth. The former all-time high, 1903. All-time closing high, 1881. So holds 19 here. Open up on the upside. Dennis, I think that the high of the day is in square. I don't think you get back up into the 20 handle.
I think it'd struggle. I think if it gets up to the higher 19s, I think it struggles around the big hold psychological number of $20. So I'm with you on that. I don't think it trades 2035. I mean, it can do anything, and it starts to tear off when you're at all-time highs. It can go, but I gotta think there's gonna be some major institutional size up there at 20. So I think it could get in the upper 19s, but I don't think it stands a chance to go through 20.
All right. Do you use it at all? It's a payment system.
What? How does it work? Spencer,
Oh
can you enlighten
man,
us on the Square? I've never used
on.
Square before.
Spencer, could you tell us what Square
Does
is?
anybody know how this actually works?
Square is you're right, Joel. It is a payment system. It's a way to just do billing, and make payments through an app. It's super. It's super. All I can say is it's super easy. The way I get it is it's sort of like Apple Pay, or it's credit cards. You just you pay with your credit card, but you pay through Square. So it's a mobile, you have the Square app on your phone, and you just pay through the app, and it's you just swipe your phone over the reader, and that's it. You're done. So
And Brad's saying that they power apps as well, so maybe they do some other stuff too. I don't know exactly, I don't totally understand exactly what they do. It gets a little bit more advanced than me and Joel, but we're all stuck in old school stuff here. But whatever regards here, when stocks making new all-time highs,
Yep.
Street kind of likes it.
Yep, I do too. Traded 1920, holding 19 is the bogey for me.
Jumping over here to we did the Kraft Heinz, we did the Square, we didn't do the 3D systems. Let's talk 3D systems here. Full disclosure, I actually own this one in my investment portfolio, a recent addition back just a couple weeks ago. I started liking the way the chart was breaking out from 15. Threw it in the investment portfolio. I've been eyeing it for a while. 3D systems, though, give us the number, Spencer, because it's not doing very well for me today.
6 cents versus 11 cents for Q1. Sales $156 million is in line with the estimate as far as guidance for the fiscal year goes. They're seeing sales coming in pretty good. $643 to $684 million is the range they see. That's in line with the $659 million estimate. EPS also fine, in line, 51 cents to 55 cents. 53 cents was the estimate. So in line guidance, not a great Q1 though.
Yeah, not great overall. Stock had run up a little bit in the report, so not surprising that it's giving back a little bit here in the pre-market. I'll limit my comments. Do have it in my investment portfolio though.
And I don't know if folks know that Dennis's middle name begins with a D. Also, it's.
I know this is if I was ever to go public just as a person, and this would be my ticker symbol. So, 3D Systems has stolen my ticker
Dale's
symbol.
your middle
Triple
name.
D.
Dale's your middle name.
Why don't
right?
you just tell everybody the whole world about what I was? Now they all have all my information. People are ripping my information off now. They know my middle name.
All right, 3D Systems, man. I don't know. The pre-market chart's really not telling me much. $16. Let's see. Yesterday's low was 1607. Actually, a two-day low, 07 and 13. So you hold 16. It's got a chance to rally up here. Under 16, maybe I only have 30 cents, 40 cents on the downside. I see four lows right at the 1665 area. So pretty good support in this thing. Recent high of the move was made yesterday at 1670, 50 cents away from that.
What about Viacom? Yesterday gets murdered, along with a lot of the other media stocks. It comes out with earnings here this morning. Spencer, can you enlighten us first what happened yesterday with Viacom
Oh,
falling from $44 down to 39.26. And then secondly, how they do on the report.
Well, so it's funny. So Q1 adjusted EPS 79 cents versus 76 cents. Sales of 3.256 billion versus 3.18. So a beat on the sales number and a beat on the EPS. And then all you see, at least all I saw this morning, is positive headlines. Is Viacom, all their properties, which is they own CBS and how great CBS is doing, and they own they own HBO as well. No, that's Time Warner. Forget HBO. But all you see, all I saw this morning is headlines about all of Viacom's properties doing well. Thanks to Trump. So that's all you see, and I guess that's reflected a little bit in the numbers.
but what
Viacom
happened
bouncing
yesterday? Did
back,
we get what
Joel.
happened yesterday? Did
Yeah,
he?
like they got killed. A lot of the media companies were really getting murdered. I mean, Disney got killed, Viacom got killed. There was something, goldfish memory here. I did see it cross yesterday, but if you look at all the media companies,
Okay.
CBS, they all got ruined yesterday. I'm not sure what was said.
Closed on the low of the session, trading in the green, but not by much here. Pre-market high, that quick spike up to 41, and now we're back down. I mean, there's a lot of people stuck on this thing. They
Yeah,
bought yesterday, so now it's up only 25 cents off the report, trading at
yeah.
39.50. I mean, I just would have liked to see it, take out yesterday. If I'm long this thing, it takes out 39.13, low of the move. See ya. I don't want to be ya. And more downside after that.
Here's the deal. When you have a stock that gets absolutely murdered on earnings, or murdered the previous day and then reports, I don't care even if they blow it away. There's so many people, what you said, stuck. And so many people got hit hard on this yesterday. It means you just got tons of overhead supply, even from yesterday. So even if this company would have blown it out, it was going to have a struggle to even get up over like that 42 level, which looks absolutely enormous. So whoever sold in the 41s was paying attention to the move yesterday and knowing how, even a good report is going to probably be sold. And actually, I wouldn't be surprised if it goes red just because of yesterday's action. Not because of the report, but because there was so much pressure on it yesterday. There are traders underwater in this issue, short-term traders.
Man, this thing always has crazy moves, doesn't it?
It
It's a
does. It's a wild child. For it's
wild.
such an old company, and traditional media company, it's a wild child. It has these, it seems like once every 6 months, it has these 6 or 7 or 8 point moves, which just, would blow one way or blow the other way. And wow, it's definitely an impressive move here for Viacom yesterday. And I don't know. So I think it's going to struggle just because I think you have so many people
I
underwater.
got a couple other weekly lows to keep an eye on here if we do breach that $39 level. This is going back in January. Had a weekly low at 38.48. That was the third week in January. Second week in January, you had a low at 38.01. So don't get too carried away if we get into the 38 handle in Viacom.
And also reporting last night, if we're sticking with the earnings theme here, let's jump over to, man, I have so many stocks on my list. Let's go to Newskin, NUS.
US it is. Q1 EPS 51 cents, that beat by a penny. Sales of 499 versus $491 million, so they beat there too. As far as guidance for Q2 goes, we're seeing sales that's a miss. 530 to $550 million. 594 was the estimate. EPS 65 to 70 cents. 88 cents was the estimate. As far as fiscal year EPS, that's coming in line, and sales coming in line still. So bad Q2 guidance is the headline.
No trades this morning, but it is trading down here in the pre-market, or it is actually offered down here in the pre-market. 54.99, best bids of 53.10. Was trading a bit last night in the 53.5 handle, so that's where they're kind of pricing it. So I think I'm keeping a low on the 53.28 low back on April the 11th. Joel, you got any other levels for
Yeah,
us?
that's it. I mean, coming back on the upside here. Yesterday's low, not up to 55.20. So, sure, some people would like to see a gap fill, though. Not a lot of trading so far in New Skin.
Okay, let's jump away from earnings and let's just talk oil here because it is getting the beats here this morning. Some of the traders want some technical levels there. They were talking about it earlier in the chat. Give us some technical levels
Whew.
here on oil. Jump into the crude futures and maybe if you want, even grab the USO because a lot of our traders talk the USO as well.
Wow,
Like me.
this is ugly. This is
It
ugly.
is.
Yeah, look at this. We were at $54, and this is basis the what is this? The June contract. We traded 54.22 on April 12th, and here we are under $47. Boom! New low for the year, number one. We came down to this area, 47.47. That was in March. We've blown that away, trading way below that. So you got to go back. This is kind of tough, folks, because the contract rolls every single month. So there's like a month of opportunity, when you're trading that contract. So on your platforms, I have at CL up, and I'm looking under this 47.21 area, and I see a low at 45.92. This is basis the front month contract, and that was in November. Now, are we going to get down to 46? I don't know. I'd use the half and whole numbers. If you take out that new low at 46.73, maybe 46 and a half, 20 cents off the low. Just a bad day for the crude oil futures. And let's look at the USO. Maybe that will a little bit slower of a mover.
Okay.
Yeah. Looking at the USO, man, that has crashed through. Let's see. Lows from the last few days were 986. It's trading at 978. This doesn't seem to be moving as much as, is that right, Dennis?
Down 1.5%.
Okay. That's not, and crude's down 1.86%, man. This thing really doesn't move as much.
Well, it keeps in line pretty close.
Yeah.
I mean, 1.8, you could just have a settlement thing versus the other thing. It's usually pretty close.
9.56, that corresponds to your low that you had in lower 46 handles. So
there is obviously the tracking error, and we know USO deteriorates a little bit more over time because of the way it's structured. It's always rolling the contracts, but overall, on a day trading vehicle, USO is going to be very close to crude for the most part, the crude futures. So I typically just use the USO as my indicator because I don't like paying futures quotes.
All right.
So 30 seconds here left. Just quickly, just wanted to mention about GE because Downward Dog has been asking about it. General Electric, nice bounce back candle yesterday. So this thing was down for 1, 2, 3, 4, 5, 6, 7 days in a row. Yesterday it traded down again at the open, made a new low on the move, and then you had the old key reversal day. Stock closed actually near the highs. So you know how I like my 2-day moves. So actually, I don't mind GE here. I think GE could see 29.50.
Yep.
Which isn't saying much. It's a slow moving stock, but
just got killed off its report, and it wasn't that bad of a report. They took that thing straight down here. Just keep an eye. 29.29 was the high from yesterday. You had another high back on the 27th during that climb at 29.31. So after that, things open up to another double top, 29.55, 29.60. All right, Puerto Rico has been in the news, so we are going to bring in our expert, Cate Long, for the Puerto Rican Clearinghouse, get a little clarity on what's going on in the situation in Puerto Rico. We'll be right back with Cate.
Alright, welcome back, traders and investors, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with one of our favorites, Cate Long, Muni Bonds expert, founder of Puerto Rico Clearinghouse. Cate, how's it going today?
Good, excellent. I did actually get some sleep last night. How you guys doing?
We're doing good. And I imagine we're all doing better than Puerto Rico right now. They finally, I got the symbols there from Brent. Thanks. We finally got the chance there to declare bankruptcy after all this time. I guess real quick, Kate, for our listeners who have not been following the story, explain what happened yesterday and sort of why that matters.
Right. So last June 30th, President Obama signed a new law, which is a specific form of bankruptcy or debt restructuring and fiscal reform for the territory of Puerto Rico. It had a series of processes in it, and the one that everyone took notice of yesterday was the sort of process where they transitioned from where they should have been consensually negotiating with creditors to this court structured process where a judge will come in and start organizing what's happening and who's involved and stuff. And that process can and may lead to certain classes of debt being haircut.
Now, this is the number that I found. So they have $73 billion in bond debt, $50 billion in unfunded pension promises. That comes out to about $35,500 owed for every man, woman, and child in Puerto Rico. So a lot of money owed right now. How do they get out of this?
Right. So the number sounds astounding, and Puerto Rico does have a much lower median household income than the mainland. But you have to understand, Puerto Ricans are not responsible for federal taxes for the most part. So whereas a mainland person, a mainland citizen taxpayer would probably be net all in having a debt responsibility between federal, state, and local, probably around maybe $160,000, depending on what state and city they lived in. Puerto Ricans have a debt liability per person, in the range of probably about $35,000. So it's a lot, but I think it just sort of illustrates that there's a lot of debt for everybody out there. And Puerto Ricans generally have low labor participation. They don't collect a lot of taxes. Government's not very efficient. So it's just hard for them to, with this kind of slow, mushy economic activity they have, to service all this debt they have.
Okay. Now, we know that a lot of retirement funds, pension plans have exposure to Puerto Rico. So I guess what is yesterday's development sort of mean, and I guess this whole process, what does it mean for people, in the state to have their, part of their retirement savings wrapped up in Puerto Rico and maybe won't get that money?
So the estimate now is, and it moves around a little bit, there's 500,000 bondholders, separate bondholders in the Puerto Rican debt stack. And that debt stack, Joel and I have talked about this in the past, has a series in it. It's like a cake with all these layers in it. And some of the debt is strong and has very strong security or liens, and some is very weak. And depending on what of those slices you own, or a bondholder or a mutual fund holder owns, the recovery or what you'll get back out of this process varies. And it goes all the way from, likely maybe like 75, 80 cents at the top to 5 cents at the bottom. So there are going to be losses. A lot of the mutual funds, because of SEC regulation, have already marked these bonds to market. So the losses are already been absorbed in the portfolios or the net asset values. So we're not going to see like tomorrow, like everybody's statement is suddenly going to blow up. Most of this has been happening over a period of several years, and they've walked down the values of the bonds and stuff. But now the real fight starts, and what those exact recovery levels are for every slice of the cake is what everybody's going to fight about.
All right. So then, what does this do as far as implications for other struggling municipalities that are actually like in the U.S., right? So Philadelphia, Illinois, right? Lots of places, cities, and states that are maybe piling up the debt too. What does Puerto Rico's development say for them?
Yeah, it definitely has a knock-on. There's no question. Detroit, you guys are in Detroit, I think. That had a knock-on effect to the rest of the market, because the way certain classes, again, you think of a cake where these different levels of debt with different, varying amounts of security or seniority were treated, the way they were treated in Detroit had effect on the rest of the market, and how they viewed, different types of bonds, from cities and states. This process will also happen in Puerto Rico. And there's no question, states like Illinois, cities like Chicago, Philly, Hartford, Connecticut, we have a list of bad boys, that's definitely going to, make everybody wake up today and go back to their spreadsheets and look at all this stuff a lot closer.
Questions from our chat here, Kate. Can you speak at all about the status of Act 22?
So Act 22 is still in place. That's a local law in Puerto Rico that allows basically well-to-do mainland people to move to Puerto Rico and escape federal taxation and be taxed at a local income rate in Puerto Rico of 4%. So it basically creates a tax haven for U.S. mainland people that, have a lot of assets or income to go to Puerto Rico. And I'll tell you, Senator Hatch, U.S. Senator Hatch doesn't like it. People in Congress aren't too thrilled on that. So, long term, it's not something I would set up a business in Puerto Rico or buy a big house based on personally.
We're on the line with Cate Long of the Puerto Rican Clearinghouse. Implications for the U.S. markets. I mean, we're in the heart of earnings season here. Pretty good earnings season at that. Knocking on the door of all-time highs here. Just shrugging it off. Any potential? I mean, there may be some holders of the bonds, holder of the debt there, but what are the implications for the U.S. markets?
So, Jill, this has been coming for years. I mean, you and I have had series of conversations over the years. So I think for the markets themselves, people that have been active in markets, especially the municipal market, we've seen this train wreck coming for, months and years. I think for the broader bond market, they all kind of look over and say, yeah, it's, basically, people are starting to say Puerto Rico is the next Argentina because Argentina litigated their sovereign debt for, basically 10 years. And in terms of the equity and guys that don't follow the bond markets and stuff, I think everybody's going to go, geez, what happens now? Like, the government shuts down there. There's just sort of a general, lack of understanding of what the municipal bond process or bankruptcy process is. But, for the most part, one state filed this Title III petition yesterday. It goes into a district court, and it starts the court, the federal judiciary, starts to take control of the situation and make sure that the government, the Puerto Rican government, will be providing services to people. They have the right then to adjust labor contracts, collective bargaining agreements. So it's, it was a big explosion and went through the media yesterday, but it's also the sort of start of a more orderly process.
And before we let you go here, just U.S. interest rates here. Fed seems to be, standing pat here. Just outlook for interest rates and the muni bond market.
Yeah, so we talked about this forever. And, Ms. Yellen has started talking about writing off the balance sheet, the Fed balance sheet. I think that's probably pretty significant, just in terms of a general loosening policy. We're still in a very, very extremely low rate environment. So in the muni market, just, yields are very low. It's not very attractive to people to cross over from, even like some kind of stock that has a dividend, it's not, muni bonds, unless you're in super high income, tax bracket, they're not that attractive to people yet. But as interest rates go up, I think we'll see a lot more interest in this space.
And Cate, I don't think Spencer knows the story when you were on the show. This was like 2-3 years ago, and we were talking about the Detroit bankruptcy and the proceedings and stuff. And just out of nowhere, she says, "Well, I don't know what Buckfire is going to do," and it turns out that Ken Buckfire was an attorney from New York handling the bankruptcy, and that's Lisa's last name. It's a relative.
I was
going to
say.
Yeah.
I don't know.
Well,
Joe, those guys are down in Puerto Rico too. Everybody,
I was just going to ask you that.
All the bankruptcy guys, restructuring guys, everybody are like feeding at the trough down there now. So everybody's in the party. But yeah, definitely. Detroit is fielding some very strong contenders in the Puerto Rican bankruptcy show.
I guess they have experience.
Definitely.
I guess they have experience, and you can't escape the Elkonians no matter how hard you try. Let that be a lesson. Cate Long, Puerto Rico Clearinghouse. Thanks so much for hopping on today. We will talk to you again soon.
Thank you. Thanks,
Okay,
Cate.
guys. Thanks. Bye.
All right, let's go get Dennis back before this gets too off the rails. Dennis, are you here?
Yeah, I hear him laughing in the background there when you said that too at the Benzinga headquarters.
Yeah, that was
Can't get
Brent.
away from those Elconics.
Nope. Okay, let's roll back into the earnings if we can. We got a couple minutes before we're going to grab Gordon Johnson of Axiom Capital. Is there any ones that we missed? Duncan?
I mean, there's just so many, like
a
there's
lot.
297 stocks reporting today, but maybe we should just preview a couple here just before we go. We're gonna get Shake Shack tonight, SHAK, and I'm stuck on. I'm looking at this one. I'm like, well, it's been a dog. It's been a pretty, so it kind of fits that description of, the stock was $95 stock back in April. It's kind of just hanging out, so it fits that description, but it's a valuation that doesn't allow me for whatever reason to buy this ahead of the report. Joel, what are your thoughts are going into Shake Shack numbers tonight?
If I was trading out of the report and it went through 34.50, I would try and lift an offer there. 3 highs in a row. Oh, look at more than that. Let me 1, 2, 3, 4,
Big
5,
number.
6 highs in a row. Let's call it 34.60. Above that, way a lot of real estate up to 35, maybe 36, 36 and a half. But that's the bogey, 34 and a half. Whether you're trading it today or through the report on the downside, absolutely needs to hold $33. Made a low at $32.96 on April 20th, and that low's been protected a couple times. I have still not been over there, so Dennis gonna have to get you.
We
over
tried when we
yeah,
came over. Lined up. I mean, this one, if it's any indication, this one in the Motor City is busy. It was going to be a 45. We were there at like at 11:30, like a half an hour before you'd think the lunch rush would start on a Thursday, and they told us it was at least a 45-minute wait.
Yeah,
Those stores are busy.
Yeah,
There's no doubt about that. And I'd love to try it, but I haven't had a chance yet either.
All right, you want to sneak one more in here?
Activision's going to report tonight, ATVI, and I just want to bring this one up just because it has been on an incredible run.
Man.
So if you look at this thing, this is the description of this stock needs to blow it away to probably go higher. It might do it. Activision has blown numbers away before. We had the gap and go actually back in February where the stock went from 40 to 45 and obviously it held those lows and continued to run since then. So I'm not saying it can't do it, just saying it needs to blow it away to probably go higher.
I just consulted with the Newsdesk's resident video game expert, Nick Donato. He says he has a bad feeling about tonight. So you heard it here, Nick Donato.
Oh, yes, bad feeling on the ATVI numbers. They need to blow it away. That's
okay,
all
they need to blow it away. I mean, Nick saying he's got a bad feeling, so I don't know.
Yeah, but he's been.
If it comes just in line or they beat by a little bit, I think the stock goes down. They blow it away, stock probably go higher.
Yeah, but I think Nick has been bullish GameStop since like 35. So,
Oh, come on, Joel. Come on. Come on. Don't do like Nick like that. All right, 8:50. We got to go grab Gordon Johnson and ask him what's going on in First Solar and the rest of the sector. So we'll be right back with Gordon. All right, welcome back, traders and investors, to Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Gordon Johnson, Managing Director at Axiom Capital, one of our favorite guests. He is maybe the most influential analyst on the street when it comes to the solar industry. Gordon, how's it going today?
Good. How's it going?
It's going well. You came out yesterday with a rather interesting rating. You upgraded First Solar there to a hold. Can you from a sell to a hold, can you talk us through your reasoning?
Yeah, so we had a $21 price target on First Solar, and that was looking at, essentially, I guess, stable earnings that we feel they will see in 2020. And essentially what happened is Suniva, which is a U.S.-based crystalline silicon module company, which is actually owned by Shenfeng, which is a Chinese-based SOE, filed a Section 201 and 202 petition against imported Chinese solar panels. Now, keep in mind, this petition is actually being funded by a London-based hedge fund. So Suniva went bankrupt, and a London-based hedge fund approached Suniva and said, hey, we will provide you $4 million in DIP funding to go file this trade petition against Chinese imports. And what that means is that it's not just Chinese imports, every single import of solar panels, forget about China. 201 is everything, whether it's made, if it's not made in the U.S., it would have to be priced at 78 cents. That's what they're alleging in their petition. Now, what we are saying is, if there is a compromise, right now module prices are 34 cents. They're suggesting they should be 78 cents, all imported. If there's a compromise at 56 cents, and you apply somewhat of a discount to that, let's say 45 cents to what you think First Solar can sell longer term, and assuming they get to their 22 cents per watt cost target with their Series 6 technology, the stock is worth $76. So what we said is, we don't think this 201 petition is going to pass. We think the ITC is going to vote no. But we pegged the probability at no, yes, 60-40. So if you apply 60% to our $21 price target plus 40% to the upside of $76, you get a risk-adjusted fair value today of $43. And that's not our price target, but that is where we think the stock is headed. And with that in mind, we thought it was, it would behoove us not to, upgrade the stock. So this isn't a fundamental call. We think First Solar's business is structurally impaired, but with this dynamic out there, we think being short is foolish.
Gordon, so if they vote no, will you come out then and probably, reiterate, maybe a sell rating on this thing in your old $21 price target, or, and when does this vote happen?
Yeah, I can't say what I'm gonna do with respect to my ratings. We know that this is gonna be in process over the next 180 days, which is also further kind of risk to being short, because we know that people are positively biased on this stock and the solar industry, so they're going to speculate positively, and they could do that for the next half year. However, if this decision comes out no, that would be, let me just say, very bad for First Solar, because we believe their core business is structurally flawed, and without protectionism, we believe that they will be competed completely out of the market.
What did you think about the quarter that they just reported?
I mean, we thought the quarter was what we expected. I mean, it was a horrible quarter, excluding the sale of the big Moepa project, where they recognized 100% of the revenue in this quarter. Excluding that project, based on our numbers, we think they lost 23 cents, which would have been a miss to street estimates. They also moved some items out of cost of goods sold into OPEX, which made their margins look better. Look, their core business is horrible, and this quarter underpins that. I know a lot of our peers are coming out and saying how great the quarter was, but that's not the case. They sold a project, which is one-time earnings. Their steady state earnings were bad. So that's our view on the quarter. But they have this this trump card, if you will, with respect to this trade petition.
Hey, Gordon, just real quick, when you say their business is horrible and structurally flawed, can you just elaborate a little bit on why that is?
Yeah, I mean, maybe horrible is an aggressive word. They're not a horrible company. We do think that their accounting is aggressive, but we just think they're in a bad position. And very simply, they are targeting costs. They're investing $1 billion roughly to get to costs of 22 cents by 2020. Right now, panels are selling for 34 cents, and they're falling roughly anywhere from 30 to 40 bips every week, which suggests prices exiting this year are going to be like in the mid-20s, mid to high 20s. So if prices exiting 2017 are in the mid to high 20s and a structurally oversupplied market, and these guys are targeting costs of 22 cents by 2020, where will prices be in 2020? One could argue that prices will be below where they're targeting their costs. If that's the case, then they're dead on arrival.
Gordon, we just want to talk to you about one of your other calls on the show here. Caterpillar had a good quarter here. Spiked up over 104. Seems to be leaking here after that report. Could you give us your interpretation of the numbers from that report?
Yeah, I think Caterpillar is probably one of the most overvalued stocks we've ever seen. And let us elaborate. So with respect to the earnings report, the beat in the earnings report, as per their own comments, was due to non-U.S. economic factors. It was due to the timing of the recognition of stock-based comp, so that's going to be a negative for them the rest of the year. It was due to the timing of variable cost recognition, so that's going to be a negative for them the rest of the year. It was due to the timing of period cost recognition, again, a negative for them for the rest of the year. This is all, they said this, not me. And a mixed benefit this quarter, which is going to be a negative for them for the rest of the year. Look, I think why they did all this is because they wanted to put up good numbers ahead of this, accounting fraud investigation. They wanted to show, the SEC that they could put up good numbers despite not cheating. And again, the SEC. If you read the New York Times report where he got the report from the Dartmouth professor, she is clearly saying after her nearly year of work that they have committed accounting fraud. That's what she is saying very clearly. And also, if you read the warrant, essentially that warrant reads as if the government thinks Caterpillar is like completely untrustworthy. So the point is, the numbers were driven by non-economic factors. And if you look at all of the indicators, the non-resi indicators, Dodge non-resi construction, census non-resi construction, construction spending, construction employment, all of these things are pointing down right now. So the markets with which Cat competes in are pointing down. And look at what's happening in China. You had another wealth management product collapse today. You had the Minxin Bank wealth management product fraud. Interbank rates are spiking. So it looks like China is slowing as well, which has been a big benefit to them. Look, Caterpillar, their key markets are slowing, so fundamentally there's risk. But given where the stock is trading today, if you look at what their peak earnings was, the most they've ever made, Caterpillar, is $8.43. You assume that their earnings, get to mid-cycle 3 years out. Discount that back to the present at a 9% discount rate. You're talking about a fair value of like $98. Again, that's using peak earnings. Keep in mind, their earnings peaked in 2012 when oil had went from 40 in like the early 2000s to like 90. Keep in mind that peak earnings happened when oil pipelines are being built in the United States. Those are one-time pipelines. They're never going to be built again. Keep in mind, those peak earnings happened when China was stimulating at a level they're never going to stimulate again, because China has stimulated so much that even though they're issuing more debt, that debt is going to pay back and roll over existing debts versus finding its way into the economy. So we would argue their earnings are never going to reach that level again. But even if you assume they reach that level again, which we think is highly unlikely based on the factors we just mentioned, put a 15 times multiple on those peak earnings, discount it back to the present, assuming their earnings, they get to mid-cycle earnings 3 years out, and you're still talking about a fair value of $98. The stock's trading at 102. This is ridiculous. You have peers of ours using mid-cycle earnings for these guys of $9 when they've never earned $9 in the best of times. I mean, it's crazy. So we think it's massively overvalued, and we think that people are going to have to realize that as they realize that the stimulus that Trump is promising isn't coming, and as their earnings continue to disappoint.
All right, Gordon, we don't want to keep you too long. We'll let you go. Gordon Johnson, Axiom Capital Management. He's their managing director. He is a solar analyst, as you can tell, knows what he's talking about when it comes to the space. Gordon, thanks so much for hopping on today. We'll be in touch.
Thanks,
Thank
Gordon.
you.
Great segment.
He is an expert, man. It is hard to keep up with him because he is such an expert, and he goes
Information overload.
Information overload. That's for sure. Information overload.
How about that? Back-to-back days, we have the top technical analyst on Wall Street, Gene Munster. We follow that up with Gordon Johnson in the solar sector. And did you hear the passion in his voice when he was talking about Caterpillar, the conviction on that?
It scares me. And actually, it was scaring the market a little bit, too. Caterpillar was trading up, and actually hadn't traded for 40 minutes. As soon as Gordon Johnson started saying that, the bid started getting hit. Not a lot of volume, but actually it did get hit down a little bit there just on his comments. So a few people scared there. It scared me, too.
All right, we're
going
to wrap things up. Got to get Spencer working on fixing this computer and preview the final show of the week.
On tomorrow's show, we got a pair of guests for you. Actually, only one guest now, Salem Abraham. He actually has not been on our show for quite a while. He is a hedge fund manager, and he runs. He's a commodities trader. He's
very active.
Very active in the commodities and the futures game. Super nice guy, and very knowledgeable about those commodities and futures. So looking forward chatting with Salem Abraham on tomorrow's show. It's our last show of the week. Hope you enjoyed today's show. And Flack mentioned in the chat, yup, definitely going to have to give that Gordon segment another listen to make sure I understand exactly what he said, because it is very information dense. But I hope you enjoyed Gordon Johnson and Cate Long on the show today. We'll be back with you folks tomorrow. Please remember that all the information, material, and content on our show is for informational purposes only and not meant to be investment advice. Have a good rest of your day. We'll see you folks on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.